Hi, welcome to the Market Alert for Friday, the 19th of May 2017. For those of you that are brand new to PPT, welcome aboard. You've joined us at the right time, actually. Going forward from now throughout the summer, you're going to see a lot of volatility in the financial markets. We're just coming through a period where we've had 17 straight days of really not an awful lot of movement and record-breaking lows in the volatility index. Now, my advice to anybody that's new and joining, today's market alert is going to look incredibly complicated. Well, not so much complicated, but probably more overwhelming, because there's an awful lot that's going on at the moment, and if you're not in at the beginning of why the markets are doing what they're doing at this point, it'll seem slightly confusing. So my suggestion is, for those of you that are new, if you go to the Pinpoint Trader site, you will find in the members section, I'll just wind this back, market alert here. You can actually click on this and this will take you to the archived ones, or the last 20 days I think it is, or something like that. If not, you can go to YouTube, type in Pinpoint Trader, and then just click on the link here, and this will list all of the market alerts. Now, I would go back at least a week. A lot of these are quite short in time because there wasn't a lot going on, and me talking about when the markets were going to kick off and all the rest of it, and the rationale behind it. So you may want to just go back and get up to speed with where we are, as I say, and then when you come back and you see this and going forward, you will know exactly where we are in the bigger picture and the background of what's actually going on in the markets, because it can seem slightly confusing if you're new to something. So that I fully understand. There's also another element in today's market alert that you won't have seen either, which I, again, when we get to it, I will show you where to go and have a look at the video, and then everything will be fine. It'll bring you up to speed. Right, so let's get on with yesterday, and I'm going to do things slightly different today. I'm going to start off with the reason behind the move yesterday. As I said in the update yesterday, the market, if it moved lower, the areas of support, mark them up on the chart. The market found those areas of support, which again we'll look at shortly, and then moved higher. But you can't beat why the market, the rationale or reason behind why the market moved higher yesterday. I'm just trying to find I'll just go to the headline first, and then I'll stocks dollar bounce after Comey clip sparks Trump bump. So there was a great line in here. I'm just trying to oh, here it is. Yeah, so this is it. Today's bounce back in the dollar and stocks was brought to you by a clip from 2 weeks ago showing Comey admitting under oath that obstructions of his investigations never happened. So this is what's being cited as the reason for bringing the market back. And of course, on Wednesday, when the market moved sharply lower, it was everybody wanted him impeached, but all of a sudden a clip from 2 weeks ago shows Comey saying that there was no obstruction of justice. But it was a clip. I mean, that's what he said under oath. I mean, so what? We'll find out going forward, no doubt, with the new investigation. But he's certainly not off the hook, without a doubt. So let's go and have a look and see how the market reacted yesterday. And this is the recorded version, so you can see what's happening in real time. You can see how the market was quite volatile in the pre-market session. You've got 100 points down, certainly 70 back, and then back the same again before the market found some support there. Now, there's also something very interesting happening here as well, and here's a tip for you. Again, for those of you that are new, this is going to seem quite alien, and again, like I say, you join just at the time when the volatility is kicking off, which is great because you'll have the trades, but the technical aspects in not as much technical aspects in the software, but going forward we may just have to adjust a few of the settings. At the moment, keep them at the default setting, but for those of you that are long serving, as they say, and been with me longer than the income tax, then you will know exactly what I'm going to do shortly as we go through this, and the necessary, you'll see me fiddling around and why, the rationale behind it. Now what's important here is the first bar that kicks off is a 50-point bar. Now last week we couldn't even get 50 points for the whole of the session, so we know that the volatility's kicked off and things are starting to move. And when this happens, when you get a 50-point bar in the first 5 minutes of the session, then you're not going to get any signals. Now that can be advantageous on the basis that you're not going to get a losing trade either, but it also means that you can lose out. Now you'll see there's a major battle going on here as I move forward in the timeline. You can see the volume building in this bar, the second bar of the session. Not quite as much as the first, but we know there's something going on because it can't move higher and the volume's near enough the same, so somebody's selling into it. And we then see the market come back and fight. You can see this massive fight going on, the volume's huge. And then eventually the market breaks out to the upside. What a surprise. As I've said before, they want the market higher, and I shall keep saying that. Now this is obviously we missed out on this move to the upside, so what I'm doing here is going back and having a look at the settings. We've got the default settings, which is 8 and 25 in the indicator settings. And what I'm doing is playing around with these to see where the change in the bar range, because obviously we had big bars to start with. We don't want to miss out on the trade. So the initial part of the session is just a matter of having a look and seeing if we can pick up some signals. And there you'll see the signal now come onto the chart. Not in this trade, because I'm thinking, okay, the volatility's kicked off. We've been used to 17 days without any, and now we've got some. So I'm just having a play here, and those of you that are familiar with the software and used to and been through this sort of market phase before will get exactly what I'm doing here. But those of you that are new, just ignore this for the time being. And as we go forward, I will send out notes saying adjust the settings to pick up the actual signal. So you can see here that the range has gone from the normal 825 to 31, and what that means is that there was 31 points in this bar alone, whereas normally we just head for 25 because that's a nice modest volatility. But because of the fight that they had in the initial part of the trading session in this area here, you can see that we needed a bit more to actually pull the signal through. At the moment I've still got the default settings, and looking at the overnight market they can remain at the moment, but again, when we got this sort of volatility, I will give you a heads up on that. So the market moves higher. We've got Super Mario speaking at 6:30, which you can see here. That's Super Mario speaking. Having made this move, the market's likely to run out of steam until he speaks. That's the norm. That's what it's been like for years of trading. And you can see that now the volume is starting to drop off. Those that made money on the run up here have left for lunch, and the market trades sideways, and that's why you see the two losing trades. The market starts to move lower and then it comes back, and you'll see the market go to the buy side, then you'll see the buy side fail and the market move, because the market's waiting for a central banker to speak, and we know when the market's waiting for central bankers to speak, whether it's Yellen, or Draghi, the market will trade sideways, and that's precisely what we're seeing there. And then you'll see prices just continue that sideways movement, and I'm going to switch to the end of day chart now because I had to turn off the recorded version. So let's just go to, and there you go, you see the completed picture. So we had sideways and then the market moved higher. As I said in the email that I sent out, expect the market to move higher following Draghi's comments. I have no idea what the comments were, but whatever they were sufficient to move the market to the upside, which is what we saw. We had a bit of a sell signal late on in the session, and that went down to the scalp just after the close. So a strange day, and I'm going to come back to the daily chart I'll go to the daily chart and have a look and see what is really going on here. Looking at the background of the market, you can see entirely what's going on, and here it's absolutely fascinating. We've got a down day here where there's some major selling, but look at the next day, the market, or yesterday, the market moving higher, but more importantly it comes off the highs. So there was some selling late on in the session bringing the market back. It's not quite convinced yet that the downside is over, but as I've said on many occasions, they're going to do whatever they can to bring this market back. The first point of resistance in this market, should prices move higher, is going to be the 20,759. Make a note of that one, keep an eye on it. And then of course the second one is the low of yesterday's pre-market session at 20,505. In today's news, what have we got? Absolutely nothing, according to the software. So there is no news today. So this is going to make it very interesting. We could go from, and I'm going to give you the heads up here, we can go from a very volatile day on Wednesday, a climb back from yesterday, and today sideways and no volatility at all. So just to warn you that that could be the case. And again, we've already got a bit of a clue with the price, the overnight prices, tiny range from the low to the high so far. So it's going to need something to come out and kick this market to the upside. Let's just have a look at the pound. That's was an interesting one yesterday, and what kicked off this move of moving the pound higher? There's sort of two camps at the moment. We've got the pound with the Brexit stuff and everything else that's going on with Europe, and then we've got all of the conspiracy theories of Trump working with the Russians, nobbling the election and all that nonsense. So the sort of two camps of trading at the moment, or two separate ones to a degree. Of course, obviously the pound is influenced by the US dollar, which we'll come to in a moment. But this buy signal yesterday, that was the move that came off that was down to this one. Pound jumps, FTSE falls, and that was down to better retail sales figures that were released yesterday, sending the pound higher there. And in the evening was fascinating. I was sitting here watching the Dow and the pound. There was a short on from the afternoon, nothing happened, and all of a sudden it just fell out of bed. And again, that was based upon some sort of comment that was made with Comey. Where was it now? But I can't find it because I want it. Probably not. Oh, it was at the top of this page, wasn't it? Yeah, on the BBC page, they put out a report later that the pound had actually dropped back down below wherever it is. It's around here somewhere. Too much news. But anyway, the reason was that the pound dropped sharply again because of the comment, or the old video footage of Comey. That strengthened the US dollar, and then that sent the pound to the downside. It was reported, but I can't see it there. They've got the stocks picking up there. There we go. Pound falls below 130. So even though there are those two separate camps, there's still that influence of America, of course, still the most powerful country in the world. If they sneeze, everybody else catches a cold, so to speak, when it comes to the financial markets, as the old saying goes. So that's another thing to keep in mind. We've got all of that coming up shortly in June as well. And what else have we got? Let's have a look at the implied volatility. Now, again, for those of you that are new today, you won't know what that is. So what I'm going to do is to refer you to, sound like a politician, I'm going to refer you to the Honourable Gentleman's comments. Alright, here we go. So there is a video inside of the additional training video section, if you scroll down, that explains all about the implied volatility, and I'll put a link in today's email for you with regard to that, and also the archive of market alerts on YouTube as well. So let's have a look at this, see where we stand. So yesterday we saw the implied volatility move lower. No surprise there really, because the market moved higher. So we're at 1073 from 1117. Now if this chart looks different to the video that I recorded, that's because I've created my own VIX charts and volatility charts, implied volatility charts, and they're a lot clearer and a lot easier for you to actually see. That's the reason behind it. But there's nothing wrong with the one on the iVolatility site either, but it's just easier to see here, and I can keep all of the figures in as well where we've had the lows, so we know exactly where they are, whatever. It's just got a bit more detail, that's all. So yeah, down slightly yesterday. Again, this adds to the fact, and no news items today, that the market could be sideways, and it's Friday as well. So again, just keep that in mind. There's one thing I want to leave you with, and I've said this for an awful long time, slightly political I suppose, but somewhere in here, yeah, absolutely, Wall Street completely owns the Trump administration, no doubts about it. This market should have crashed a long time ago. And when you see that he's got Steve Mnuchin from Goldman Sachs plus a whole host of others, we know exactly why the markets are being manipulated the way they are at this time. He's not drained the swamp, he's filled the swamp as far as Wall Street is concerned, even though there are videos out there in his pre-election campaign trail where he said that the markets were overvalued. They've gone up even higher since he came in, and really they should be falling out of bed, not making new all-time highs, which they have done from January through to April. Right, I've gone on far too long. Don't normally record one this long, as you know. It's normally about 9 minutes max. Apologies for boring any of you, but there's an awful lot of information to get out there as well, and especially with having the new people on board. So normally it won't be this long. Once you get used to the flow, it's all done and dusted within a few minutes. Right, that's it so far. If there's anything to report today, I'll let you know during the day. Other than that, thanks for watching. See you in the next